Hi, and welcome to this week's Mortgage Broker Broadcast. My guest this week is David Coleman from Positive Lending, and David's back onto the podcast. It was originally on in February last year. Back he was on episode 46, back on the podcast this time. And just to talk about, just catch up in terms of what's been going on. He's very proactive on his LinkedIn profile, so we do sort of see day to day what's going on in David's life. But I also wanted to get into a bit more detail about what's going on personally, but also about his take on the market, what's happening at Positive Lending, what trends is he seeing, and what he sort of thinks the next sort of 9-12 months are going to look like from a business point of view. So let's just get David onto the podcast. You're listening to the Mortgage Broker Broadcast with me, Craig Skelton, the podcast which helps mortgage brokers at all stages of their mortgage broking career. So welcome back onto the podcast, David. How are you?
I'm very well, thank you, mate. Good to be back. It's been a while.
It has been a while, and we had a quick chat before we hit record, and it has certainly been a while. You was on the podcast. The first time was episode 46, which was back in February 2022. So it has been a while, and so much has happened for both of us, but so much has happened for you in the last 12 months. So much has happened for you from a personal level. Obviously, we'll talk about business and things like that as well, but you've got a lot of things going on at this moment in time.
There's been a lot going on, mate. Yeah, I mean, Henry's going to be 2 in June, and he's just growing up way too quickly, as we were just talking about. Baby number 2 is due to arrive at the end of June. I don't like making things easy for myself, do I? We've renovated our house since. We're now back in. We're trying to make that into a home from a house, just trying to find the time to do that. Work is ridiculously busy, but in a good way. There's a lot of business coming in, which is great, and was obviously what we want. But a lot of plates being spun at the moment.
Yeah, like you say, don't make life easy for yourself. So
No.
Is Lauren all right and everything okay with baby number 2 and
she's good, thank you, mate. Yeah, she's taken it like a trooper, as she is. That's the kind of person she is. But yeah, she's struggling a little bit with the pregnancy. But as I keep her reminded, the last time we were pregnant, and I use the word we because I'm not carrying the baby, but last time that she was pregnant, we were in lockdown. We didn't have a toddler running around causing mayhem. We actually got a full night's sleep. And we weren't out and about socializing with friends and through work and stuff. So the landscape is very different to what it was before. But no, she's doing well, thank you. Yeah.
Good. And Gus all right? Gus is sort of
Gus is all good. He's actually on the sofa looking at me at the moment going, when are we going out? But it's just been chucking down with rain. So we're going to wait a while till we go out.
Yeah, we won't talk about the weather because it has been fairly mixed right now. But no, it's good to get you back on. It's good. We've sort of met. We had the awards. I think we got to say quick hello. We had a bit of a buggy wars going on when Positive sponsored the Open Work Golfing event. When was that? I was trying to think when that was.
October, wasn't it? September, October last year. Okay. I think. Yeah.
Wow.
Yeah.
Yeah. It does. So yeah, we've got. I think it's one of those things where now you're sort of getting to see people that you've sort of seen virtually or been following or connected with and everything else, and then you actually sort of getting to meet people face to face now. And I'm experiencing that, and I'm guessing you're getting out now far more than what you have done over the past sort of year ago, the last year or so. So
yeah, absolutely. And it's so good. I mean, I'm a big believer, and there's so much more value in the face to face. Don't get me wrong. I think virtual sessions definitely hold a value and a place in what we do, because that's the world we live in now, and actually they can be really beneficial. I mean, look, would we be doing this otherwise? No, probably not. And they definitely play a part in the roles and the lives we live now, regardless of what you're doing. But the human interaction and seeing, but we'd never met before the golf day, and we'd spoken loads virtually, online and stuff like that. So to meet you in person and smash up a couple of golf buggies together was good fun.
I think that's the thing, is because even though I felt as though I know you, and obviously we've met virtually so many times, it then just when you do meet, and we didn't finally meet face to face, it just slipped into a natural, just very. It wasn't as though you might meet somebody new for the first time, and I think that's the thing with virtual. I think it does bridge that gap from the uncomfortable silence at the beginning when it's sort of like when you first meet and the hands are shaking and then you're thinking, I'm sort of building a bit of rapport with this person. I don't know what they're like. I don't know what the personality is like. And it takes that guessing thing out. So what I'm finding is when I'm having the face-to-face meetings, you're straight in, like you don't waste time. Do you know what I mean? It's just like
the
you're straight in.
icebreaker's gone. The icebreaker's gone because the icebreaker is what you know about the person online, and obviously that doesn't tell you everything about them, but you kind of had an understanding about the individual that's standing in front of you. You don't have to make, no one has to think of that really quirky opening line or that awkward moment of whatever, because there's people meet me and the first thing typically they say is, "How's that baby boy? How's Henry?" Brilliant. And listen, I can sit there and talk about him all day, so that's perfect for me. But that icebreaker bit is already there. There's no awkwardness around it.
Definitely, and I think sometimes brokers miss that. I know from a point of view, they're not going to interact sort of per se on virtual through Teams and things like that with their clients. But if they are posting and if they are putting the personalities out there and they are sort of educating their clients, potential clients, and then talking about a little bit about themselves as well, when they do meet face to face and they do get that lead and they do get that referral and they're picking up that phone, from a customer point of view, there's a little bit of rapport already there, even though there's not from the broker to the client, because obviously the client's reached out to them on the back of what they've been doing. But I think brokers miss out on it, and it sort of led me nicely to that, which I've just sort of linked that together quite well. But I didn't think like that before, because it's a case, well, actually the client feels as though they know the broker already, so the client will be more relaxed if it is a virtual, or you sat in there coming to the office, or you're meeting them at home, in their home. Then the customer's going to be naturally a bit more relaxed, so they feel as though they know you already, because they've sort of seen a bit about your personality, they've seen who you are on social media, they've followed you and connected you. So again, from a broker's point of view, you're more likely to convert that business because the customer feels that they know you already. So yeah,
I think our industry, regardless of if you're talking B2B or B2C, is built on relationships, and inevitably you're going to side or partner with or choose to work with or work closer with people that you actually connect with, or you resonate, or they resonate with you. So it's exactly what you just said is spot on, because personalities, different personalities. We've got advisors in the office, and I've got brokers that will specifically say, actually, I want to deal with that individual because I get on really well with that person, over the other advisors that are all very competent and they can do exactly the same job, but there's that connection there and they want to deal with that person. So 100%, people buy from people. That is a cheesy line, but it is factual. It's true, isn't it?
Definitely. And we've gone straight into the podcast. We knew this was going to happen. We've done no introductions and things like that. Literally, but everybody knows who you are anyway. So literally, we've just gone straight into it. And obviously, always the best way. So from a positive lending point of view, the team's expanded over that. You obviously got Andy, who I've met. You've got Oliver now in the south. Is that
that's right? Yeah. So the team's a big part of, a massive part of what we do is servicing the intermediary market and supporting them, keeping them up to speed with what's going on in the market, because you'll know yourself from looking after your business and your team that you have areas of the business that specialise in, whether it's a resi or buy-to-let side of things. But your typical mortgage will deal with that, and that's their bread and butter business. So us keeping them up to speed with the more specialist parts of the market is where we step in. And obviously in the current climate, the specialist market is really playing prevalent in supporting clients. And actually there's more call on it, there's more need on it. And brokers are now sort of opening up their minds to go, actually, I need to know more about this stuff, because there's more client demographic that is going to need these kind of solutions to support them.
No, definitely. I totally agree with you. And I think I've talked before on the podcast, and we'll have a quick chat in a second about your take on the year so far, sort of 3 months in. But I think, like I said, I've talked about it before, where there are going to be less clients in 2023 from a broker's point of view. But that's actually a good thing, because you've got more time to do the right thing with those clients and go to the end of the year to provide them with a solution, rather than just sort of, and things like obviously working with yourself and Positive. It's then understanding what those options are and then reaching out to you guys, knowing actually this has got the client scenario. This is, whereas normally they just go, no, I can't help you, and I'll move on to the next lead and the next client. They're having a bit more time to explore the solutions for clients, which is all about being a broker. That's being a broker. That's what you should be. You should be providing that service and going to that nth degree for your client that's bothered actually to reach out to you and contact you in the first place.
And I think that's it. I think the purchase market overall is still very active. I think it's a lot more difficult on a couple of variables. One, the rates, as we all know, have increased, and that affects affordability. So, there's going to be more deposits needed, or actually things just don't fit or work now. Clients' demographic is changing as well, and criteria is changing. So that means that maybe the purchase isn't possible. And we've been, as an industry and probably as a broker, very fortunate that the market has been buoyant. And there's been a lot of people wanting to buy. Rates have been very low. It's been a fairly, and I use this word flippantly, but easy job overall, because business has been flowing in. And now it's not as busy in certain areas because of everything that we're going through. The cost of living, rate hikes, and everything else that we're all experiencing are having an effect on business level. But as we mentioned just before we started this, there's plenty of gold out in those hills. You just need to know how to look for it, where to look for it, and want to look for it. And that's where we come in, and what we're doing, supporting brokers in the market, is actually helping to recognise those opportunities for brokers to say, look, if you've got this client demographic and you've got these in your client bank, there is business in there, and they probably will appreciate a phone call or communication from you. And that communication will probably turn into business, and that business we can support you with.
I think that's it. It's like you said there about wanting to do it. It's like with regards to Resi is coming in, they've got plenty of leads, there's abundance there of things coming in. So they've not had to actually educate themselves. And we talked about this like on the podcast last year, where there's a lot of brokers that have joined the industry, CMAP one in the hand, and are still learning to be like, I've sort of seen it firsthand, where you've got brokers that are coming in inexperienced and having the help and support, but still deciding that broking wasn't them for them and leaving the industry because it is a little bit more difficult than what they envisaged it would be, kind of thing. And then so you've got those people that are leaving. So there is more need for a broker than ever before from a client point of view. But it's actually, like you said there, it's about wanting those clients. And I think because we're scared, if they're not the norm we deal with, and we've never dealt with that before, it's like, well, we might shy away from those sorts of things. But then having the relationship with you or one of the team at Positive, and knowing actually there is a place, there is a space for these clients and a place to place them as well. And having that relationship with you and with Andy and Oliver and the rest of the team is then knowing that actually there's a solution, and that it is about educating those brokers, which I know that you're doing, and that's the thing with it. It's not a one shoe fits all kind of thing. Of like, not every client's got 15% deposit and the first time buyers and everything sort of very straightforward. People come to a broker for a reason, and generally being that they want somebody to piece this all together.
Yeah.
And just working with you, it's like knowing that that's actually an option. But the brokers have got to want to have sort of generate those clients and generate those leads in the first place to then feel comfortable to then reach out to you, and then that will bridge that gap. You educating and doing what you're doing and getting out on the road and really promoting the options and the way that you fulfill the market is then, well, that's great, and brokers should be reaching out and educating themselves on the back of that.
Yeah, absolutely. And I think you used the word scared there, which I do feel comes into play quite a lot, because you can't be a master of all trades. You're going to be a master of one or two, and then that's it. And a lot of the time, business is maybe overlooked or passed away simply because the confidence isn't there. But a broker doesn't need to be an expert in a second charge mortgage or a bridge or whatever it may be that we're looking at for them. They just need to know how to recognise the opportunity. And then myself or one of my team or the team internally are there to provide that experience and that knowledge off the back of it, and help the client, help the broker understand what is possible, so they can go back to their client and support them. Because when you look at it, no client ever picks up the phone to a broker and says, "I'd love 50,000 for a second charge mortgage," or "I'd love a bridging loan." They go, "I need X amount of money," and it's the broker's job as their role then to find out the best solution for that client, whatever that looks like. And then that's where we come into play, because I think the current market at the moment, obviously, There's a lot more stuff that is quirky, doesn't fit the mainstream. That's probably going to increase as well. There's probably, sadly, going to be more adverse in the market. And it's all going to lead into more specialist solutions that fall outside of that high street mainstream mold.
But the thing is, like, if you provide that, it's easier to, and we see it as a business where we get clients coming in, and it's a case of like, I've been to another broker, I can't, they've said no, there's no option for me, and then actually you provide that option and that solution for that client because you do that bit more digging. And that's nothing against the past broker, the previous broker. They might not have been educated, they might be new into the industry, they could just been see the bank and just been the case of no, we can't help you kind of thing. So it is about, like say, taking themselves out of that comfort zone from a broker point of view and learning about what options are, because they don't want to feel stupid when they get that lead or that client coming in. They don't want to feel stupid. They don't want to feel as though they don't know. But you're breeding loyalty. And the thing is with that, you get one client who you provide a solution for that's been told no elsewhere, they're going to stick with you for life. And they're going to be telling every man in down the pub, every friend, every family that you're the broker to speak to, and that's how you do your business.
Yeah, I mean, and that's exactly it. The client, a client speaking to a broker to find a solution, as I said, like they don't know what they want. They don't know what they know how much they want. They probably know what their end goal is. They don't know how they're getting there, and they don't know the best way to do it. And like you said, if a client's speaking to a lender directly, which is probably a more mainstream lender because that's what they would have access to, and that lender says no because it doesn't fit their criteria, it doesn't mean there isn't options for them in the market. It just means it might take a different direction, might be a more specialist solution. But at the end of the day, the client, the broker comes in, and where we come in.
Absolutely. So in terms of the first 3 months of the year so far, from a business point of view, what are you sort of seeing trends? Are you sort of like, what are you helping brokers out with? What sort of, how are you sort of finding the first 3 months?
Yeah, so I mean, like back end of last year before Christmas, I was kind of, sort of having conversations with brokers saying, I think the start of the year might be a little bit quieter. It's probably going to, it's not all doom and gloom. There's green shoots out there, things will pick up, and inevitably. Pretty much I was back on the 4th, from the 5th, my phone did not stop ringing. It was like everyone sat at home at Christmas and had contacted their brokers in the new year and gone, right, I want to do this. So I think what we're seeing at the moment on the first charge side of things, there's a lot of activity. Conversion isn't as high as we're used to, but then I think there is a element of consumer confidence in the market where actually clients are saying, and unfortunately they're not aware that things aren't really going to go back to those 1-2% rates. We're not getting them back, maybe not in our lifetimes. Who knows? It could be, but inevitably the rates are not going to be as low as what we've been privileged to. And I think maybe once the budget is out the way tomorrow, the next Bank of England decision, those kind of factors will come in, and maybe that will level things out a little bit. So there's a lot of activity, but I think once the market, and I say the market consumers, actually kind of get to the understanding we are where we are, and that 4%, that 5% rate is actually what you can achieve. And the conversation now changes from what's the best rate you could get to, is it affordable and do you want it? I think there's a different conversation now. But where we've been busiest is in second charge mortgages, because actually there's so many variables around that. One, clients that are on a 1.5% rate, well, they're not going to want to refinance right now up to a 4 or 5% rate because they're going to lose that rate. So they'll capital raise with a second charge. The amount of fixed rate products in the market, it's a 2 and 5 year fix. There's still a good amount of them in the market. And obviously, typically they come with a high early repayment charge. So to avoid that, they can capital raise on a second charge. Debt consolidation, I think every one of us, you and I included, are probably looking at our outgoings in one way or another going, right, I've just got my gas bill come through in January and it's 600 quid. And I'm like, whoa, what's happening here? And it's not as though we're sitting in here in our shorts and bikinis having a lovely time inside. We're being sensible. So I think everyone's reviewing their outgoings, and it's not unusual to see at the moment of, a second charge mortgage coming through for debt consolidation, probably of £40,000 upwards. I mean, last week we had one complete. There was £120,000, all unsecured credit. And you can imagine the outgoings for that client and what we're able to reduce that to. So we're seeing that come through. And then the affordability models, obviously, I know on the high street, you're probably looking at still achieving 5.5 times with some lenders, but actually it's not actually 5.5 times, because once it starts going through it, it's probably nearer the 5 or lower, or etc.
Yeah.
So we're seeing a lot more second charge mortgage activity. Bridging has gone berserk. That market is so buoyant, the regulated side of the market as well. But again, we're seeing more chain breaks. You've got clients that are maybe speaking to a broker, and that broker has secured them a better rate end of that term, so they need to secure that property, or they'll lose that rate, so they're using a bridge to purchase. There's more clients now looking to downsize, maybe of a later life client, but they're looking to downsize simply because of the cost of running that property now. But they'll purchase pre-sale. We have been looking at bridging finance for landlords, because, as we all know, the buy-to-let market is a very, very tough market at the moment. A lot of stuff doesn't pass ICR. And if it is, are you looking at a lender that's maybe got a much higher arrangement fee or lender fee, or if it does, is it actually affordable? So actually, a bridging loan is still very competitively priced compared to the rest of the market. So we're seeing a lot more activity in there. And commercial is still very active, although rates are reflecting in the rest of the market. So that's a conversation of, can it be done? A lot of the time it is yes, but is it right for the client? Does it work for the client? That's a different conversation. And we've moved into equity release as well, which is proving, the amount of interest-only mortgages in the market that have no exit, and the demographic of client is seeing, we haven't even really launched properly as an official promotion to the market as such, but the inquiries are coming in thick and fast. So there's obviously a need for that kind of product in the market as well. So I think we were talking before, where certain parts of the business are quieter than what we would usually expect, actually they're being propped up or overly propped by other areas.
And to be fair, I saw that with regards to equity release, and I did want to get your I wanted to know more about it, because that was just something, because we, as a business, we do equity release from a CS point of view. We do equity release. We've got an equity release advisor. We're sort of seeing that there is definitely a more need for that product now than probably ever before, and I think that will only go one way. And I'm seeing more brokers I'm talking to are looking at doing the CRER kind of thing as well, and having that tool in the tool bag to having that option. So is that something new obviously you sort of said it's new, is it sort of something that's been on the go for a while with regards to equity release? How does that sort of fit with the rest of Positive?
Yes, I think it's been a few months now since we've been offering it as a solution. We're whole of market, so we've got a full panel of all the lenders. But we actually kind of fell into exploring equity release a little bit more, because we ended up doing a number of bridging deals for clients that wanted equity release. Right. And there was an issue with their property. Either it was deemed not suitable for lending on, effectively, for whatever reason. And obviously, due to the client's demographic, their age, their income, etc., they were unable to obtain finance, which means they lost out on the property. So actually, we were doing a bridging loan for that client with an equity release as the exit. So actually, we thought, why are we not keeping this all in house? It makes for a much smoother customer journey. We can place it all together. We can speak to all the lenders at the same time to make sure all of our ducks are lined up, and actually give the client exactly what they need and want. So that's how we kind of came into it. But also, the equity release, and you might be seeing this as well, there are going to be a lot of clients that are looking to capital raise for gifted deposits for their family, for their children, to get onto the housing market. So we're seeing that in the second charge world. But obviously, if you're looking at a later life client, well, then the second charge maybe doesn't work for them. So equity release, they'll be doing that to release funds and capital so they can get their children onto the property ladder, because things are a much tougher environment for that now.
No, definitely. I think we're also we're seeing from that point of view, we're also seeing not so much. I think the thing is, like you said before, about the downsizing with equity release, we're seeing more people that are debt consolidation, just clearing off those little bits. So they're not because obviously the rates are reflective in the equity release market as they are in the commercial, as they are in the resis. Yeah. The levels of rates are slightly different to what they were 12 months ago. And so, but he's still saving that client that monthly outgoing of maybe that loan or that credit card, those credit cards and things like that. And because of the society and how we are used to having debt and credit card debt and unsecured debt. And I think that's even the later life lending, even people that are retired and still have credit cards, still have those debts, still have those loans, and are just starting to now realize that actually equity release is an option for them rather than burying their head in the sand and thinking, I can't cope with this. What can I do? What's my option? So we're sort of seeing that as well with regards to debt con, and I think again that will only grow. It will only grow because that's as society. I think we'll lose the like we talked before the podcast. My son's like 17. I think our generation. I'm saying my generation. My generation is the last one, being polite there. My generation is we don't expect any sort of inheritance or anything like that. I think we're the last generation where that's that kind of mindset. Whereas my parents, I expect to leave something to the children. Whereas like I won't be in that mindset kind of thing. It will be a case of, well, you've got time and there'll be a lot of things in place to help that. So but my point is that we're finding more people are going to be taking equity release just to fund their later life. People haven't been putting into pensions. People are used to a certain lifestyle. People are used to a certain income, and we're seeing it from a pension point of view where people are realizing too late, well, I can't rely on the state. What am I going to do? And the main option is they're sat there with 200, 300, 400,000 pound of equity in the property. So, well, that is the option. That's the option you get to increase your standard of living, and why not in terms of the way that we promote wellness and mindset and everything else. Thinking, well, you do want to keep that accustomed to that lifestyle of having those holidays and doing all those things. So
absolutely. And you touched on DebtCon there, and I think what we're seeing and hearing from the market is that actually transferring balances on credit cards is a lot more difficult now. You could have a good credit score, you could be a good earner. It is not as easy to flip around as it was because the landscape's changed. There's more stringent criteria coming in. So, and that's putting people a little bit in tricky water when they're looking to, reshuffle their finances. And they're now looking, as is everyone, looking at their outgoings and going, actually, how can I reduce this down? How can I? I think we'll only see more and more of that going forward.
We will, because when you look at the personal lending point of view, the rates that were loans were 4%, 4.9%, 5% kind of thing. Those are now 8.9%, 9%. So the people are then, like you say, it's not a case of I've got my credit card, I'll get a loan and consolidate them all together, personal point of view, because the rates are less favourable now. And that's the thing, it's just getting used to those kind of rates. And like I say, it's DebtCon, I think, is going to be a big thing. Like it will continue to be a thing that grows.
Absolutely. And I think that we've seen this again. You were looking at rates of 3.5% upwards. Now you're looking at rates of 7% upwards. But the conversation isn't rate driven, because if you've got someone who's got 50,000 of unsecured debt or whatever that may be, and they're paying £1,000 a month, and you can get that payment to £300 a month, the rate, to a degree, it is always important, obviously, and it is relevant, but it is irrelevant because it's the immediate benefit that product, but it's an extra £700 in their pocket in that example. And that's what it comes down to. The rate is almost redundant in the conversation. It's what is this going to give me here and now? And when you're looking at something like a second charge or along those lines, well, typically the broker is part of that customer journey, probably 48 months onwards. And they'll be looking to see if they can refinance that maybe back into a mainstream mortgage because the client's circumstances have changed. And actually, it will better their situation going forward as well. So, from the broker's point of view, you get two bites of the cherry. From the client's point of view, they get the immediate benefit with the future potential of bettering their situation.
No, definitely. And so, in terms of, we talked a little bit about there with regards to the the rate, like the Bank of England base rates and things like that. What's your sort of, and everybody's had like, people ask me the same questions like, well, like, would you do if it was you, would you do a 2-year fix to 5-year fix now? From
Yep.
a resi point of view, what's your sort of take on the market for the rest of, certainly for the next 3 months, but then for 2023?
Yeah, well, I think like regards. I mean, my I've got 2-part mortgage, and my fixed is coming to an end in the next couple of months, I think it is. And I'm a little bit of a quandary as well. But I mean, I'm going to hedge my bets and probably go with a discount tracker with no ERC. It's going to cost me £1,000 to have that product, but it is what it is. We are where we are, because I do think that things aren't going to get much worse. They might get a little bit worse before they get better, but inevitably they will get better. Swap rates are all over the place again at the moment. They keep on going up, going down, going up, going down. The Bank of England base rate, will it go up again? Probably, but by how much? Maybe it's 0.25%. But I think once the budget's been delivered, and depending how that's received, obviously, then things will begin to level out a little bit. And it really, with the mortgage market, it is down to consumer confidence. And because we've been privileged to low rates for so long, and it's been very easy to achieve a mortgage when you need one, really. I think it's going to take a while for that to sink in to someone who isn't in the industry, who isn't a mortgage broker, who isn't working with mortgage day in, day out, as a Joe Public looking to buy their first property or, refinance or whatever it may be. It's going to take a while for that to sink in, but it just needs the dust to settle, really. And then, as I say, and I think it's the same with a mortgage as it is with, like I just explained on the second charge. The rate is almost redundant in the conversation. Is it affordable? And do you want that property? That's what the conversation is. And where do you go with that? And that's where we are. I mean, personally, myself, I wouldn't be taking a fixed rate product at the moment, because I think they will probably improve over the next year or two. So if you're confident enough to do what I'm going to do, then I'd probably go with that. But that's not my advice. I'm not a mortgage broker either, but I'm just hedging my bets. I could end up with custard pie all over my face, but that's where we are. So
I didn't realize I got Martin Lewis on the podcast today, David Coleman. I'm joking. I'm joking from that. But I think the thing is, it is very difficult to predict right now, because I think it is down to, like you said, it's down to affordability. Do we do a 2-year fix, a 5-year fix? It's all like, I'm with you. Like, I've got part and part. We moved like 18 months ago. We've got part and part going on. Like part and part, we've got like 2 products going on. Ours comes to an end. We got the letter the other day from NatWest, and it's just a case. And we're in the industry, and then you're thinking, and you open the letter, and it's like, yep, and that's going to equate to this, and what can we do, and where can we? And like I said, people are going to look to sort of save money in other areas, such as debt con and the rest of that. And I think that's just sort of the big thing for me as a broker, is it's about piecing it together and getting that, like you said, the affordability of the client. So the client knows that it's X amount of pounds per month, and he's looking at those options in terms of what's right for them and what's affordable for them. And maybe that is extending the term or looking at other things, looking at other options. Whether, like I say, and it's having that ability and skill as a broker to think like that. But who knows what is going to happen? Like I say, we've got interest rates, like the Bank of England, we've got budgets, it's just, I'm 100% with you. The dust just needs to settle. I think but that's always the case. It's just that the dust needs to settle. Let's get the swap rates back to some sort of stability that will then influence the market. We've got everything going on. Like I say, we are 4 weeks in ahead with this podcast, but like, we've got the stuff going on in Silicon Valley right now with regards to the rates, the businesses that are out there, and the banks that are out there, and HSBC buying and Barclays. There's all different things sort of going on, which I know consumers day to day won't understand how that affects the mortgage market. They're just interested in what their mortgage rate is. But I think from a broker point of view, you need to be in dialogue with your client very, very early. Like, you just need to be case of.
And I think that's across everything. I mean, your new clients that are coming to you and looking to get onto the property market, They need to kind of be, I think, nurtured a little bit more now, because the understanding of what's going in the market is probably very alien to them. What's going on? Why is it different to 12 months ago? Why has my friend got a 1% rate and you're offering me 5%, for example? And then the existing client bank as well, which is a message that we've kind of been delivering in our presentations and our roadshows and stuff like that. What's your existing client bank look like at the moment? How many of them have got a 2-year or 5-year fixed? How many of them have had their circumstances changed since you last spoke to them? When did you last speak to them? Because they probably need help. They probably want help. Do they know they can get help? Do they know that they can better their situation? They're things that the general consumer probably isn't going to be aware of, and that's where the broker's value really comes into it. People's life change all the time. They lose their job, they get a new job, they get divorced. Things happen. They get sick. Things. They've taken out that nice new big car that they're paying £600 a month on the drive, and all of a sudden their mortgage has gone up by 400 quid and their gas bill's gone up by 200 quid or whatever, and all of a sudden that car is becoming very unattractive. Can they do something about that? Can they look at their outgoings? Can they, all of those conversations, have they got protection? Is there protection? So there's so many variables and a reason to pick up the phone to a client that's already on the books and not leave it to the 11th hour when their product's about to run out. Because the way the market is at the moment, there's, as we said earlier, there's gold out there. And I think your general consumer isn't going to be aware that actually maybe they can do something or they need to do something to better their situation. That's where a broker can really add value to their clients.
Absolutely, totally agree with you. It's about and it's not just a case of, like you say, it's about being proactive. It's about being proactive with your client bank, even though their deal might be not open until for a couple, like 2 years or 18 months or a year. It's still reaching out to those clients and knowing that you've got their back. And I think one thing that I've sort of noticed in going back to something you sort of said there about normality and with first-time buyers and people that don't know, is that you say their friend might have got a rate of 2% 12 months ago, and then you're talking, they're looking at buying, they've saved the deposit, looking to buy a house, and then you're talking about 4 and 5%. It's sort of like, well, hang on a minute, well, like that's a big deal. And as well, you also have the parent, if you're looking to have parents involved with it as well, the parents will be in background, whether they've had a mortgage or paid the mortgage off or still in a mortgage that they secured 2 years ago on a 5-year fix. And then you're talking as a broker to this first-time buyer, saying your interest rate is going to be 5%. And they're going, oh, they're showing the mum and dad, and mum and dad's going, what? Like, you need to find somebody else. You need to, and it's about it's educating your client and educating that third party to then understand that this is what's happening. So if it is involving all these kind of parties to sort of bring it together to make sure that I am noticing that some of the brokers are experiencing clients that are just shopping around. It is very much of just bouncing around for the best rate, not about service. It's bounce, and you've got to take that client by the scruff of the neck and sort of say, look, this is what I offer. This is the market. This is how it is. And if there is any other third party, you've got to get those involved with it as well. And sort of, well, if your mum and dad are saying that, let's get them in. Let's get them as part of this process, because then you'll end up with their remortgage or their protection or their later life lending or whatever the case may be. So it's just a constant education that this is where there is a bit of uncertainty, but the dust will settle. But this is not going to settle in the same place where it was 12 months ago. It just or 2 years ago it won't.
And I think it's probably fair to say that over the last, God knows how long, but let's say the last 5 years, the majority of conversations from a broker to a client is, do you want a 2 or 5 year fixed? That is it, right? That's the conversation. And also, if you're below the age of 40 or around that, you've probably never seen a rate increase in your lifetime. So it's all a bit of a shock to the system because we haven't experienced it. We've been very privileged, very lucky. So things have dramatically changed, and I think that conversation needs to be opened up more with the end client, because they're not aware, they don't know. And let's be honest, when we're looking at something, it doesn't matter whether what it is, a loan, a mortgage, whatever. We want the best product, we want the best rate, we want the best offering. But it's understanding this is what you're going to get now. And this is a situation. You take the analogy, if you look at you go into a car showroom, your finance could be on 14. Nice shiny new car, don't you? is that payment going to be affordable for me? So it's kind of looking at it from that perspective. How much do you want that house? Can you afford it? That's where the broker's going to come in and say, we've done a presentation recently, and I think it's 12, if you take sort of around about 12 months ago, the difference in what you could achieve when looking at properties, about 130 grand difference now because of affordability models. So it's changed that dramatically over that period of time. So that just shows that the bank of mum and dad is going to become more prevalent. Clients are going to need more money. It's much tougher now as a younger person, because how are you ever going to afford to save for a deposit? Mm-hmm. Rental is at record highs. Cost of living is at record highs. Everything is going up other than people's salaries. That's the only thing that's not changed, isn't it? So, everything's going out and there's not a lot more coming in. So, I think that the market's changed and the conversations have changed really. But that's where, that awareness and education from the broker side comes into play. And inevitably, lenders will adapt to the market. Lenders need to get money out the door. That's what they're there to do. If they're not lending, they haven't got a business model. Yeah. So, we use the phrase once the dust settles, but once the dust settles, we'll probably see more innovation from lenders coming out, and they'll adapt their criteria to suit and work, because
they have to, because like you said, that's their business model, that's how they make money, so they've got to, absolutely. Yeah. So what in terms of, like you sort of said about there, just moving on slightly, in terms of road shows, I've seen you at the Etihad, I've seen on social media, I've seen you at Watford. Well, that's a local one, isn't it? I've just realised.
It was easy for me, 2 minutes down the road, yeah.
Yeah. So in terms of, are you out doing road shows? Are you doing how sort of the message of getting out there to the brokers right now from Positive?
Yes, the road shows were built specifically around that, is really inviting brokers to a free half day out. But with a view of meeting lenders in the market that we work with across all product ranges. And then also giving our take of what we're seeing in the market, and let's be honest, I think every expert, and I use the expert as people that I look up to and would listen to in the industry, everyone I've seen stand up recently has said, I'm going to talk to you about what I think is, I really don't know what's going on, because we all know that could literally change overnight, and we've all experienced that over the last few years. But I think it's really kind of getting an understanding about what we've seen, where we are, what we predict is going to happen, or what we think is going to happen, and really how we can play part of supporting those brokers in that journey. And then myself and the team are out visiting brokers face-to-face or doing virtual sessions like this. But there's more face-to-face stuff happening now, where we're going out and holding sessions with them, either on a one-to-one or with their team, to basically show that this is what we're working on in the market. This is business that we're helping other brokers with. If other brokers are doing it, you need to be aware of it, because if you're not, your competition's probably picking up your business. So, let us help you understand the opportunities. Like I said earlier, you don't need to be an expert in it. We're the experts. You just need to know, light bulb moment, I think I've got a solution for this. Let's pick up the phone to Dave, have a conversation. Is it something we can work with? If it's yes, it means you can support that client. It's a win-win.
Yeah, exactly. And that's it. It's just having that tool in your tool bag, knowing that you know what that tool does and how it works. You don't need to know the ins and outs of exactly how it was produced and things like that, but you understand that tool's there and use it if the situation and right. And the thing is as well, is excuse me, David, it's about reaching out to you and the team, because you are you are based on like rapport, and it is about education, and you're not going to sort of be frowning down the phone thinking, why is this person ringing me? They've got no idea, kind of thing. That's not about you or the brand or the business. So I think that's important to have that.
The amount of conversations I have, I had 2 of them yesterday. Broker phoned me, Dave, I'm really sorry for phoning you about this. Well, firstly, don't apologise. That's what I'm here for. 2, I don't think you're going to be able to help with this. Do you know what? We could help with both of them. It took a different direction to what they thought it would be, but there is a solution. So do you know what? This is what it looks like. Go back to your client. Do you know what? Both of them are in my inbox this morning. Yeah, actually, the client's interested in doing it. Can you put me in contact with your team? That's exactly that. Now, put them in contact with the actual experts in the office, and they can speak to the broker and let them know what we can do. So there is no. I always kind of say that if there's something you can't place or you're struggling to place, pick up the phone. You've got nothing to lose from doing that. A conversation could turn into a maybe, and a maybe turns into a yes. And as you said at the beginning, which is 100% spot on, if you can help a client that's been turned down elsewhere or thinks they can't do it, and you can find a solution, you've got a client for life. It is as simple as that. They'll come back to you. They'll spread the word. You're going to get repeat business off them. You're going to get introduced business off them as well.
Exactly. Dave, thank you so much for your time. And we'll leave it on that sort of very poignant note, shall we say. And but like I say, it is about reaching out. We'll obviously tag you into the post so people that do want to be educated, do want to know more. If they're not following you and don't see your posts already on LinkedIn, then I don't know who they are, because I see the connection that you do get with everything that you put on there. So, but thanks for agreeing to come back on, and thanks for your time, and thanks for being very open, honest, and just trusting again in terms of very conversational with no agenda on the podcast.
No, thank you for having me back, mate. It's always a pleasure. Really, really enjoy it every time.
Good. Thanks very much for your time.
Cheers, mate. Catch up soon. Take care.
Thank you for listening to the Mortgage Broker Broadcast, the podcast which helps mortgage brokers at all stages of their mortgage broking career. If you have any questions about this podcast or any topics you want us to discuss, or if you're interested in working with me further, then please get in touch.